For plebs, by plebs, dropping the Bitcoin-only signal. Pleb Underground. Welcome everyone to the Pleb Underground.
Welcome back to Pleb Underground. This is episode 113. Pleb Underground, must in, have in, twosome. Send a tour round, lust, nav in who, some fend, and more, sound, rust, having gruesome. Fucked her perfect state as if I'm Gavin Newsom. Not sure if cold, so you get your toe wet. You know this bold bard, the Bitcoin poet. Out from the cold, jarred by the moet, a Chandon, Bollinger Bands, the old guard, you know it. I used to be a maverick with Grey Goose, set an alarm but snooze, all hell loose. Leverage, trade and lose, oh well, noose. All MF doom, fake news, can't tell yous. Aligned incentives, peaceful forces. Shitcoin is mad because they backed full horses. I give a girl a good taste, she wants to meet the sources. She loves the amuse bouche before 21 courses. When is the decision? For the slay, wake, scare, burn. It's amazing that a precision, when they take their turn, use a proton collision, they make dare cern. Black Swan event, fray fake air spurn. They vote blue and red, but the mix is brown and clout. No one serious left, they all clown about. Got the camera on, they're all down and out. Skeptical folk, more frown and doubt. Welcome back, Pleb Underground. Perhaps you're new to the way I do things. My words are like food to nourish you like Bitcoin. Lock number one, best suitor. I'm Walton, not from the block. Cash App, suitor. Trying to nudge how I need to. Be flying, she judge. Do I bleed blue? They prying, they judge. But I read through. Some lying, they smudge. Try to lead coup. They think the king moves slow. Only one square, ring, one mo. They want this queen, just faux play. Want this scene, trust pro. Some can write, but for some it's a mess. I can't write one thread. Gets the puns off my chest. Think ahead, make your moves. They botch and obsess. Think what it takes, floor proves. They watch, check the dress. This ain't Little Britain, I'm after the bitties. She ain't brittle, get in, I like the fitties. Or it's taking the biscuit, crack her, McVitties. No coiners look up, you're the one he pities. Ain't no second best, like each one of these ditties. Trump soon in, to mark, a good win, bit please. Phil chilled on the levels, he's like mile high lit ease. We got your boy from one of those flyby cities. It's hard to keep up with the flow, current eddy. Generating new power on the go, turn steady. Frustrating you, how I make 'em ho, yearn heady. Phil anchors, you watch, your turn, ready.
Straight fire, Walton. Absolutely awesome. Guys, in case you don't understand from that rhyme, who is joining us? We've got the co-founder, CEO, and fellow Bitcoiner, Rob Hamilton, and I should say what he's co-founder and CEO of Anchorwatch. Rob, thank you so much for joining us on Pleb Underground. It's absolutely amazing to have you on the show, man.
Thanks for having me.
Sweet. Yeah, we're going to talk about Anchorwatch. You're going to school us, teach us.
Like I've been talking about Anchorwatch increasingly. I keep because we've been talking
never had
about
Rob
like,
on the show.
Custody solutions, and so it was time to get Rob on the show. Yeah.
Yes. Long overdue.
We were talking. What was it? Bit Block Boom. We were talking, right? Kind of crashed.
No, I'm saying like the last couple of weeks, I've been talking on the show about how we have, you know, different kind of multi-sig setups that weren't available before, you know, what you guys are doing, what the Liana guys are doing, and there's, you know, and there's gonna be more, but we're gonna get into that in the show. Phil.
Yeah, man. Let's do it. Let's do it, guys. We are gonna move it on over to the numbers.
Yeah, the numbers, of course, brought to us by Time Chain Stats and Time Chain Calendar. What do the numbers look like this week, Phil?
At the time of this recording, the block height is 871,783. The Bitcoin fiat exchange, 96,877. Big Macs per BTC. Damn, that is a lot of terrible food. All right, 18,810 Big Macs. Total public lightning capacity, 5,278. Fastest fee, what? 7 sats per V-byte? And the fiat exchange is 96K. Anyways, sats. Oh, wow. Moscow time is brutal. 1,032. What happened to those sats? You're getting like nothing almost. Anyways, yeah. So those are the numbers. I got to say, we haven't done those numbers in 2 weeks, and those numbers look a lot different than they did 2 weeks ago. Because last week we did a live show. Which was totally different than this. And so 2 weeks ago, pretty sure we were at like somewhere in the 70K something like
Was
that.
it 2 weeks ago? 70K?
Was that 2 or 3 weeks ago? I don't know.
Maybe like 3
So
weeks
I know
ago.
I know
3
we're
weeks
up
ago?
50% in the last month, basically. If that helps. So like if we're at 90K, we were at 60K a month ago.
Yeah, that.
It was right around Halloween. We wicked up to
That
like
makes sense.
73K. We went back down a little bit. I'm looking at a price chart right now to like 65 early November, right before the election. And then election day, we were talking like 75, and then the Trump announcement win, and we've been running up ever since.
Pretty crazy. It's
So,
pretty crazy.
30% in a month.
Yeah.
Is it all down to Trump? Is it all down to Trump, Rob? Is that what you're saying?
No, I'm just looking at that's when I think the market felt de-risked and a lot of people in general felt more comfortable. And then you also have other large buyers in the market, like your MicroStrategies, right? That are just coming in and ripping both convertible bonds and they're at the market offerings, selling shares and kind of buying more, right? So I think those two, it all lined up at the same time.
Let's talk a bit about MicroStrategy, because
Sure.
we often on the show MicroStrategy comes up in like not infrequently on the show. We're not huge fans. Like,
this is a MicroStrategy
I
describe
podcast, right?
Right.
I describe
actually Michael
MicroStrategy
Saylor.
as essentially it's a
He's
state-sanctioned
LARPing as me.
shitcoin using fiat debt tools. But it's a custodied asset. It's not Bitcoin. But perhaps for our viewers, you could explain how maybe why it's your favorite shitcoin, because I don't own any of it. I wouldn't buy any of it, but are you part of the MSTR betas?
Me, I don't have a MSTR position. I'm also not salty about people who are winning with MSTR. Like, I think Michael Saylor, with his vision and strategy of buying Bitcoin and then putting it onto the corporate balance sheet, is something that's been around. I think it was around 2020 he announced first starting doing this, right? So he's been doing it for years. And what we're seeing now is him actually ascending into a bull market, having already kind of made a heavily levered bet on this, right? So this is the first time in a one cycle like timeline being able to come back and revisit his thesis, and not only being validated for all of those Bitcoin he bought at much lower prices, but being able to open up to larger capital markets. And I think larger traditional finance is so starved for performant products like fixed income, like bonds, that he's able to offer a way for people whose job they can't go out and buy stocks for their company. Maybe they work at a financial office,
loophole, right?
and it's a way of, since the entire asset of the company when you own shares is owning Bitcoin, you do a convertible bond saying, here's a bond, you make your quarterly payments, whatever, and then at the end, or you have an option to actually convert that bond into stock over time, is giving away for people in fixed income desks to have access to Bitcoin upside, which is something that hasn't been possible before. And with real inflation kind of always lagging behind government yielding debt and stuff, this is providing a way to actually provide better performant real returns by accessing Bitcoin. And this
So
is
insurance companies that don't have the ability to buy Bitcoin are buying MicroStrategy bonds instead. Is that are Anchorwatch going to be joining them in doing so?
So Anchorwatch is unrelated to that, but just for the viewers at home, insurance in general is kind of the mandated health of how strong the company is based on how much excess capital they have, their surplus, right? And there's in the United States, it has a whole like legal cases and like legislative history, but insurance is largely a state by state run operation. Insurance is regulated by the 50 states. So there's a self-regulatory body called the National Association of Insurance Commissioners.
Mm-hmm.
All of the heads of each state come together and they kind of like set the general ground rules for how insurance works across state lines. And one of these is the capital requirements, right? And understanding if you have $1 billion of assets, maybe you can write $3 billion of premium, for example. Now, if you were to go and buy Bitcoin, you would have to, like, let's say you bought $100 million of Bitcoin, which MetLife did a couple years ago through NYDIG and stuff. They have to actually take it on their balance sheet and take a 100% write-off as if they lit the money on fire. They can't recognize Bitcoin because Bitcoin, according to the NAIC, is not an admitted asset. But unrated corporate debt is at a discount. This is a theory that when I started going down the insurance rabbit hole years ago, was looking into the status of admitted assets. And the other person who saw this a mile away is Jeff Punter, who knew that exactly mechanically why an insurance company want to buy this. So it allows someone who's...
It's regulatory arbitrage, essentially, is that...
For some players, yeah. Because if they want Bitcoin exposure and their options are you have to basically light your money on fire and have a really long time horizon to then go back and recognize it at a later date when you sell. Or if you do MicroStrategy bonds, you still get access to that capital to use on your balance sheet for your reserve ratios to write more business. So yeah, there's also a bit of a regulatory inefficiency there, which would justify why you would want to pay a premium against it, right? That's often a common thing people talk about, is that the market cap of MicroStrategy is 3x the amount of Bitcoin they hold on their balance sheet. So you're paying like an absurd premium.
Stocks
hold on.
Trade on a multiple based on future incomes, right? Like
that would be the other side of it. Yeah.
I have a question for you, and let me ask you this: what do you think that premium evaporates if other big players come to the table, right? Of course, we all know the story of Microsoft, right? And that we know that their board of directors has been, has essentially been instructed to say no to the proposal. But it gets you thinking, though, because MicroStrategy has such a sizable lead, right, in terms of the amount of Bitcoin that they have accumulated and at the price levels they accumulated it at. Yeah. So I feel that a new player, right, would have to be some type of one of these types of company that is so cash flow positive or cash rich, I guess, to start purchasing this Bitcoin, or the ability to produce a whole lot of debt in order to purchase all this Bitcoin. And of course, the long-winded question is, do you think that MicroStrategy premium evaporates if another player comes to the table like that? Because I've noticed that nobody seems to really care about the Semler scientifics necessarily. Like, it's good news, but like they're not going to out MicroStrategy.
Right. So, that's a good point, because I was going to mention Semler Scientific, Marathon, MetaPlanet. These all trade at higher premiums than MicroStrategy does. And I think, to your point, it's because they are all companies which are smaller than MicroStrategy when it comes to their cash flows. So they'll never be able to lever up as much. Because remember, like, I think
this is literally the Cantillon effect, right? The bigger you are and the more assets you have, the like cheaper rates you get to borrow in greater amounts. This is pure and simple Cantillon.
And from a cash flow health of balance sheet standpoint, you're better able to manage downside risk. Where like, oh, what happens if the Bitcoin price goes down? If Microsoft was doing this, they'd have a larger asset balance sheet with customers paying for services to be able to service that debt in the event the Bitcoin price goes down. So they're able to lever orders of magnitude more if they so chose or were able to. I think it's important to call out that MicroStrategy was in a unique position on its governance rights. Michael Saylor, as the founder, had super voting shares. He had full or basically full authoritative control on what MicroStrategy could do outside the board of directors. And he convinced the board of directors to go along, and they've all been very profitable and correct as to date. As far as goes to the premium, in the long run, I think it naturally will have to. Just like, let's say MicroStrategy literally buys 100% all 21 million Bitcoin. They're not going to be worth, times 3. They're not going to be worth 63 million Bitcoin. Like, there is a point where like it will just trade at the more par value. As to what that time horizon is, or if the ratio and premium can go more offside before or after, like, those are things that I'm definitely not qualified to have a firm opinion on.
Do you think at some point it would actually go below? Because surely there are, essentially management costs, right? And
previously, it used to. There was a time where MicroStrategy, you were able to buy, the market cap was less than the amount of Bitcoin that they owned. It's happened before. It was very early on, but it was possible, right? So I wouldn't say that it's impossible at all.
This is just GBTC with like public debt markets.
The interesting thing with GBTC is that, unlike that was a closed-end fund, so you weren't able to redeem the Bitcoin.
Okay, so this is open GBTC that they can issue more of, and public capital markets.
Yeah, right, exactly. And I think just it's providing traditional asset allocators who have certain mandates where maybe they're not allowed to buy the underlying Bitcoin, gives them exposure to this stuff, right? And I think sequentially, what's really interesting is looking at the threading of this. There's a snapshot for the QQQ, which is like a tech sector aggregator, like an S&P kind of equivalent that's happening. And this ramp up is happening, going right into that snapshot, which then causes more passive buyers that are like pension fund managers that are just auto buying like QQQ, S&P 500. And this is just going to be more passive flows flowing into the company. And what I find most interesting is that people who criticize this as like, performative or like what a joke, like this is like, I view it as more of an indictment of the larger financial system. Right, like someone's playing by the rules in the game. Like, you don't hate the player, you hate the game, right? And so if you don't like how this is happening, you're just not liking that Bitcoin is, people are increasing their appreciation and value for Bitcoin. It's being reciprocated in the price.
So
is this not?
If it's so great, go on, Phil.
I was just going to quickly ask. So, I mean, would you not even argue that this is all just hyper Bitcoinization, right? You know, as much as we may dislike these institutions or what they stand for or what they come from, this was kind of the story, right? Always has been. This is where we've been going all along.
Who do you think's buying the Bitcoin at $1 million per Bitcoin?
Yeah,
it's not going to be people at farmers markets walking up and buying whole coins.
It's going to be Saylor who's selling it at 3 million
it's
per
me.
Bitcoin. No, it's Saylor who's selling it at 3 million a Bitcoin.
Right.
But we're all exactly at seller. Right. If the premium holds, that's exactly right. Like his Bitcoin's worth 3 million. But that's what it is, though, is that like this is Bitcoin. I view it like if you view it as a boat, it was a very, very small little paper boat at first. And as the boat gets bigger, it's able to handle more waves. So in raw dollar amounts, the volatility is higher. You know, like back when I got into Bitcoin in like 2014, it went from 1,100 down to like 200, right? And that was an $800 swing. I think since we've started this call, Bitcoin is up $800. You know what I mean? Like the previous entire swing of like the value of this stuff.
Nobody cares.
And no one cares, right? So like the volatility goes up. This is Bitcoin kind of entering and breaching into the larger financial system where there's much, much larger pools of capital to play. There's trillions of dollars on, you know, in the fixed bond market that are going to start tapping into this stuff. This is the part of Bitcoin entering into the equation and being monetized throughout the rest of the financial system.
Very well said, man. I'm so bullish now. You know,
right, so if it's so awesome, how come like none of us like own any? Like
because we're idiots.
Don't even own any, Rob, right? Like why? What is it? Is it because you're a self-custody maxi like me, or is there another reason? Do you just think like and basically you're a cuck if someone else is watching?
I think if you have a 401k IRA, like if you have these tax advantage accounts, having MicroStrategy on there is a no-brainer. Like especially when in 2020 when they first announced this strategy. Well, that's the other thing too, right? So I have a lot of skepticism on the long-term health of things, of like the IRAs and 401ks, and if the government's going to allow you to have these tax shelters, especially when a lot of people are making millions of dollars buying MicroStrategy in their tax advantage accounts. Like, you know, it's going to that's I guess a tangent to a different conversation on like longer-term health and perspective of like government management of these accounts. In some ways, I think adversarially, you have to think of them as honeypots, but I'm, you know, I think I would just look at structurally, if you're going to be allocated to stocks, I would see no reason why not to buy some MicroStrategy as a long-term bet of Bitcoin. I'm not a trader, so I'm not sure at these prices, but I was telling everyone I knew that had like 401ks, IRAs for years, I'll buy some MSTR before the ETFs launched earlier this year, right? It was the only way to get a Bitcoin price exposure. And I think, you know, I have no problem against it. I think it's funny. I think it's great. I think it's very much seeing it kind of like blow up the way it does, and everyone says how big. You get this whole new crew of no coiners that come in who had no idea that Bitcoin existed or really cared that it existed until MicroStrategy started buying, and now everyone's really upset that they're accreting balance sheet and earnings by buying all of this Bitcoin and retiring debt through convertible notes. I find it hilarious. It's a whole new crew of no coiners that start coming in thinking that they figured out Bitcoin and how it has no value. The amount of times I've seen that over the past week is just, it's so good.
So hold on a second. So they're essentially positing that this is essentially a Ponzi scheme that is perpetuated by MicroStrategy?
Yeah. So yeah, right.
So wait, so did MicroStrategy just become the new Tether?
Well, this is right. It's the new scapegoat, right? And what a lot of people don't understand is like, MicroStrategy issues $21 billion of debt. It's like, yeah, it issues the debt over a 5-year time horizon. And what a lot of the other debt's been happening over time is people convert the debt into shares, which means you're removing the liability off MicroStrategy's balance sheet. So like as the Bitcoin price goes up, MicroStrategy's balance sheet gets
is converting those into shares, right? That get sold,
which is helping the strength of the balance sheet because you no longer have those debt coupons at the surface, and now the debt coupons are 0%. I actually think that you'd be able to start probably doing these at negative rates. Like, why wouldn't you do negative 25 basis points, which means that Saylor would be getting paid to go buy Bitcoin? Like, he just cleared a $3 billion tranche at 0%. Why wouldn't you go a little bit lower, right? Like, I don't know. Like
I hear the word tranche, I think of like The Big Short. Like,
credit default swap.
I think of Goldman Sachs.
Of, fucking nonsense, quite frankly. Anyway, all right. Thank you for explaining that for our viewers. So yeah, guys, if you would like a state-sanctioned shitcoin that has access to public capital markets, MicroStrategy is the one for you. Swiftly moving on. Philip.
Yes. All right. Yeah, we are going to. I appreciate that, Walton. Yeah, we are going to. That wraps up the numbers, and we are going to move it on over to the Fireside Chat. But first, a word from our sponsors.
It's like people only do things because they get paid. And that's just really sad.
Pleb Underground is brought to you by KnowHue. Go check them out at knowhue.com. They are building Amazon for Bitcoiners, a one-stop shop for Bitcoin-only brands. New brands are going to be added every month, so go check them out. Don't miss what's happening at knowhue.com. Pleb Underground is brought to you by CypherSafe. You guys all know I am a pet rock enjoyer. Love the swag, love the collectibles. This is the ultimate Bitcoin collectible. That's right, guys. We're talking 16 ounces of solid titanium, the Bitcoin Rolo Triangle. Go check it out at cyphersafe.io. Pleb Underground is brought to you by ThunderFunder. Go check them out at thunderfunder.com. ThunderFunder is a funding portal registered with the SEC and a member of FINRA. Their mission is to provide retail investors access to investments while supporting the growth of open source projects. They love Bitcoin. Check out their shitcoins. Thunderfunder.com. Welcome back, everyone. The Fireside Chat. Rob, we've already started off, I think, on the good foot here. We're diving into some really interesting topics that obviously is racking everyone's brain. And not that I want to continue to talk about MicroStrategy, but I feel like we're going to end up talking about it again at some point. But putting MicroStrategy aside, okay, you are working on Anchorwatch. Even though we've spoken a few times, I would like for the viewers and listeners, for the people who don't know, what this offering is in Bitcoin, if you could please explain it.
Can we have a mini chapter on mini script as well? Because I think
happily,
because I don't know much about that either.
Let me go super zoom out and just talk about the thesis and kind of my perspective on the landscape of the industry. And then we can talk a little bit about what the business side Anchorwatch is doing and how it's also unlocked on the tech side.
Okay, cool.
At a really high level, Bitcoin as a digital bearer asset has evolved in how we secure it and how we kind of interact with it through this sense of what's called self-insuring. Self-insuring means you're owning all of your own risk. And if something goes wrong, there's no one else you can talk to. Too bad, too sad. Not your keys, not your coins, right? A time-old story. We've codified a lot of practices around this, whether they're hardware wallets or seed phrases or air gapping or, using, Bitcoin Core, using different wallet software, verifying firmware. Like all of these things are kind of built in this whole thing of not trusting anyone because you know that the data at the end of the day, which secures your Bitcoin, is ultimately a really, really big number, somewhere between the number 0 and the number 2 to the 256, which for context, that is, there's more possible Bitcoin private keys than there are atoms in the observable universe, right? The scale of what we're talking about of how big these numbers are is what allows the asymmetry of cryptography to work. So now let's look at it this way. As kind of Bitcoin's adoption through institutions and kind of at first, back when I got into Bitcoin in 2013, one of the best ways was you rip apart a computer and you just have it sit on an offline computer, or you use something like Armory Wallet, or maybe what you do is you back up a wallet.dat file onto a USB and then you delete the wallet off your computer. That's, this is back 2013, this is the way you did it. Armory Wallet was cool. There was Glacier Protocol. Hardware wallets and BIP39 seed phrases started coming up, so you were able to kind of bifurcate the internet access of the computer with the actual storage of the keys. All of these things are kind of in a continued evolutionary process, finding better ways to secure data. Now, that's kind of putting the pleb hat on, right, as the individual. On the commercial side, you have these aggregators called custodians, which are responsible for managing many, many, many people's assets. And the first premise of where the vision of Anchorwatch came from was, if you are a custodian, you are charging a SaaS fee, a software fee, right, for being able to manage the safeguarding of those funds. And the basic understanding of that trade is storing Bitcoin is complicated, right? We are experts. We will manage it for you. And when you want your money, we can give your Bitcoin back to you. Now, structurally, this is interesting because once you start peeking under the hood, it's pennies in front of a steamroller. If you're a software provider, you get to charge fees, charge fees, charge fees. If something goes wrong, there may not even be any insurance coverage for your actual asset that's sitting there, right? And so fundamentally, our vision at Anchorwatch is that for if you're paying someone for custody services, there should be some sort of understanding of a financial guarantee ultimately tied to you. Now, the industry has some insurance coverage that exists out there. As of today, before us, there is no one who is actually offering, I would call, one-to-one coverage or actually putting your name on an insurance policy in a meaningful way, tying you to your Bitcoin on chain. And we view this as a gap in the service of the market, kind of speaking to the immaturity of Bitcoin in the ecosystem, is that if you're going to pay someone to be a custodian and a safeguarding of your assets, there should be an understanding if I put in $1 million and they screw up, that I get my value commensurate with that, right? Like, it shouldn't be my problem. You can think of it loosely, conceptually, as the idea of like you have FDIC for cash at a bank account, right? Up to $250,000. If you have $10,000 in there and the bank mismanages something, you still get your $10,000. Now, this is where a little bit of the interesting concepts go into the technology side. And I'll do a little bit of the tech stuff and we can kind of pause there and we can dig into all these different questions.
Okay, cool.
Yeah, so on the technology side, the problem is up to this point is that you have very large custodians that aggregate hundreds of billions of dollars or $100 billion of assets. And they may have one policy that covers themselves or maybe by extension their customers. The terms aren't always so straightforwardly clear. Where Coinbase has $400 billion, I believe. Looking at their last quarterly earnings plus the run-up of assets, $400 billion of assets, and I think they have a $420 million crime cover. So in the event that the employees at Coinbase commit a crime to try and steal the funds, like internal collusion, they would be able to have a $400 million policy. You do the math real quick and realize, wait a second, that's for every dollar that is on Coinbase, it may maybe have half a penny, if less, actual insurance coverage, right? So you start understanding quickly the insurance as it stands up to this point is actually more so of a marketing thing and less so of a financial guarantee. And so the way we bridge this is that all of these coins sit at a single custodian, all of the keys are in-house. That causes a concentration of risk, which is rat poison to an insurer. If all of the risk is sitting at one company in one building, it's really hard to write many policies or a policy of significant scale around it. What we've built is Trident Vault, which is kind of our answer to thinking about how can we anchor traditional financial contracts to actual Bitcoin on-chain smart contracts. And so I can actually I'll throw it in the chat here, just an actual mainnet transaction we did a long while ago. But we're actually able to leverage Bitcoin.
You can share your screen if you want, Rob.
Happily. Yeah. Give me a second to tie that. But as I'm talking, we're actually able to anchor native on-chain Bitcoin smart contracts in a way that we can kind of move beyond the way Bitcoin custody is done today. Now, to start, think about it. You have your single sig, you have your multi-sig, right? And that's basically where the entire scope of Bitcoin script lives today. There's hash time lock contracts for Lightning Network. Oh, you got it. Okay. I was about to share. Yeah. So what we're able to do is leveraging a project called Miniscript, which came out of both Blockstream and Chain Code from Peter Will and Andrew Polstra. If you scroll up and you click the details button, scroll down just a little bit, and I hit details, this is an actual Bitcoin on-chain smart contract. So if you scroll down, I don't have to go through the full diagram of this detail.
Right here, the witness script?
Yeah. So the actual witness script right there, this is going through the actual more advanced way of how we're leveraging Bitcoin for more advanced custody. Now, for example, we're able to do things like a multisig of multisigs. For the length of your insurance contract, Anchorwatch must sign the transaction as well as you as the customer, which allows us to say, and also at any point during the insurance contract, we at Anchorwatch are never able to unilaterally move funds. So even if I woke up tomorrow and I was like, I'm Sam Bankman-Fried, I'm going to steal everyone's money. On chain, I cannot do that. And your actual insurance contract is tied to this on-chain output descriptor of the addresses that are generated from the output descriptor. And this is by also leveraging time locks. So we're able to actually set it up. So let's say your insurance policy expires on January 1st. On January 16th, we can have it expire so that you by yourself can unilaterally move the funds like a 2 of 3 multisig. And this is all doing stuff today that doesn't require a soft fork. It doesn't require any sort of change to Bitcoin. It works with major hardware wallets, including the Ledger, the Cold Card, the Bitbox O2, the Spectre DIY, as well as the Blockstream Jade. So like this technology, I've been working on the wallet side of it for a bit over a year now. We're getting ready to launch. It's been a really exciting thing seeing it coming. And as Walton mentioned earlier, the Liana guys, huge fans of them, are also they're the only other major player that's really kind of playing in this space at the moment. But it's ultimately delivering on this promise of making Bitcoin programmable money and tying it into larger financial contracts like insurance. Because I just think at the end of the day, insurance is so foundational to actually how markets operate that as Bitcoin continues to mature and financialize, you're going to have an insurance market that actually at scale starts catching up with Bitcoin.
So we talk a little bit about vaults, and there is also something called op vault. My understanding is current vaults don't use op vault, and also vaults are something that could be built with covenants. What makes the current vaults different from vaults that can be built with further op codes activated?
Yeah, so if we're talking about op vault, that is a soft fork proposal by James O'Byrne. The difference is ultimately, I think it may have been Jameson Lopp who coined this, or it may have been James O'Byrne. I forget which one, but the idea of active versus reactive custody. So without the Covenant soft forks today, what we are doing is we're setting up kind of more elaborate active security, where instead of it just being a 2 of 3 multisig, like I mentioned earlier, it's a 2 of 3, a 2 of 2 of 2 of 3s, right? So you have to have 2 of 3 from the customer and 2 of 3 from Anchorwatch, which instantly has some really compelling use cases, right? If you think structurally, where you're not going to have to worry about, oh no, like someone broke into my house and stole all my signing devices. Now, like the money's lost if it was a 2 of 3 and you left it all at your house, which you should never leave all your keys in the same place, but just for the sake of conversation, we can actually have it so that after a certain amount of time passes, Anchorwatch plus another person can come in and be able to actually help you recover those funds, right? And repay it right back to you, which is all tied into kind of like the coverage of what we're offering. If you had op vault, you would be able to, if someone tried spending the money, it would sit in a holding area for a certain amount of time. And then after that time expires, you can send it to where you want to go. Or if someone who owns the vault says, hey, wait a second, I didn't authorize that withdrawal, someone's trying to steal from me, you can pull like a watchtower, like fire alarm, and send the funds back into the vault, right? So it brings about this asymmetry of attacking where you don't have to, whereas if with any of these vault, like with the mini script constructions, the moment someone tries to spend money and move funds on chain, there is no staging area to send them back to. But that's what you get with an op vault construction.
Interesting.
With an op vault construction, you can have a single sig on your phone and manage your life savings on it, because you just authorize the withdrawal. It sits in the pending state for a while, and then you wait. And then if it's a fraudulent thing, you have your watchtower tear it down. Otherwise, you let it go off where you want it to go, right? It totally changes the paradigm of like what it means to like manage your private keys when you have an op vault construction. Because you basically built in a refund button into the protocol before, or like an intermediate staging area before it actually goes out into the wild.
Okay. So you were at the conference with both of us in Bitcoin Plus Plus in May, which had a big covenants focus.
Yeah.
Where do you think kind of opinion is now versus where it was? Because to me, it seemed at the end of that like everyone thought CAT was happening like next month or something. It got a bit frothy in terms of the covenant activation excitement. Where do you think we are now? I think it seems like there's, I don't know, quite a split in the technical community. There are some kind of core developers, long-time core developers that are quite staunchly anti-covenants, and then it seems like there's some, I don't know, people who want to build stuff that are a bit more pro-covenants. Where are you, and where do you think where do you see the landscape right now?
So for where I am, everything I'm doing at Anchorwatch doesn't require a soft fork. And so from my own day-to-day operations and what I need to successfully run a business doesn't require it, right? Now, would I like to have these kind of features? Yes, it would provide better customer support services, lower the risk to customers, ultimately enable more sovereign use of Bitcoin. Those are all things I'm directionally supportive of. I just don't need those to happen for me to be able to successfully execute the vision of my business. So I think it's an important bifurcation where I don't need this to happen for me to be successful. And so I also just set myself up in such a way where I, don't need that. So would I like it? Yes, absolutely. So as where I think like the larger developer ecosystem is, I think it's been very interesting to see over the past year, there's been a more thawing of the conversation as it relates to covenants. And you'll get a lot of people who say, yeah, we need covenants, but not CTV. We can go redesign it and take it back to the drawing board. And that's a totally different response than you've gotten 3 years ago. Now, I think a lot of the blustering of CAT activating this year is I think you're falling for an Udi Psyop because there was never going to be CAT activated this year. There was like no universe, but
it was more like it's more like Reendal seems always convinced it's happening.
Why would you listen to someone who gets hired by Messiah?
Because he sounds so convincing.
Sure. I tell you, one person who flipped during the Austin conference was Shinobi. From like a month before, he was like, "No, CAT's not going to happen." To be like, "I think CAT's happening." So I was intrigued by that. It was interesting to see, of course, Rusty's great script restoration project. Far too long a name.
Yeah, bad memetics. Just CAT is only three letters.
Yeah.
It's a lot better.
Right. There's emojis already made for it, right? Like, yeah.
I want to go back to the insurance underwriting portion of your business because let me ask you this, and you may have already answered this, and I may have missed the piece, but so God forbid somebody does lose their Bitcoin. Do you actually, is it just the nominal value based on a specific date and time? They don't actually get their quote unquote Bitcoin back, right?
Yeah. So directly into that. No. So let me explain a bit how insurance works and kind of tying into the announcement we made this past week. We are now what is called a Lloyd's of London cover holder, which means that we are underwritten by syndicates at Lloyd's of London to be able to offer this kind of policy that I just talked about, securing the Bitcoin, leveraging manuscript in these more advanced vaults. Now, the reason that's why this structurally works is that Lloyd's of London today doesn't hold Bitcoin on their balance sheet. Maybe they will soon. Maybe they'll just buy a big bag of MSTR. Who knows, right? So the way just insurance works is that you have a certain amount of cash assets, and you use that to be able to say, I have a balance sheet healthy enough I have a balance sheet of X, which means with Y risk, I can afford to underwrite Z amount of like outstanding liability, right? Just to compress it very straightforwardly. Yeah. So you can't do Bitcoin denominated if Lloyd's doesn't have the underlying Bitcoin. Right. So it's a dollar denominated policy. We have visions and we've had a lot of discussions around Bitcoin denominated stuff for a future time. It's just not on our immediate focus. And with the way it works is you would have a dollar amount.
With the withdrawal being the like percentage risk times the like cost of like the risk of whatever happening.
Right. Yeah. That's exactly right. And then there's a lot of actuarial sciences and math that go into that. And the way it works is that when you sign up for a policy, we bind you to a certain US dollar amount. So let's just make the math easy and say you have 10 Bitcoin, you want to insure it at $100,000, it's $1 million policy. So it's $1 million policy. You either have a 10 or a 25% deductible, depending on what you choose. And let's say for the sake of conversation, you have a loss at $1 million, you choose a 10% deductible, you then have to pay $100,000, but then you get the $900,000 back out, right? And the deductible is used to kind of incentivize against fraudulent claims, as well as things like making sure that you're owning in some of the risk and you're not so blasé and passive from a morale risk where you're like, oh, it's not my problem, right? Like this is how car insurance, like if you get into a car accident, you pay some sort of deductible, right? This is all just have standard risk sharing and insurance works. Let's say if the price were to go up, the price doubles. You now have $2 million of Bitcoin. There is a loss. You are limited at the $1 million, so that's all you would get paid out. Now, you can always adjust your coverage upward. So if it goes down, we waive your deductible. Then
you could get the $1 million and buy more Bitcoin at a cheaper price, right?
And not only that, we will. So this is the way it works: is on the way down.
You've got a limit against that behavior somehow.
Yes. So if the price goes down, we will pay you out at the time of the loss how much the Bitcoin was worth, and we waive the deductible, which means you actually can go in and buy 100% of your Bitcoin position again and not be impaired.
But how can you prevent insurance fraud when the price is down then? Like, because surely that's an incentive.
Yeah. So mathematically, let's say it's $1 million. Let's say the price cuts in half. It's now $500,000. we give you $500,000, not $1 million. We don't give you the $1 million. We give you the $500,000 to pay you out for a commensurate amount of Bitcoin to restock your position.
Oh, sorry. So it's $1 million at most, or
At
the
most.
equivalent price
That's why it's a
of the
limit.
Bitcoin.
It's not a minimum.
Sorry,
it's a limit.
or the equivalent price of the Bitcoin if it drops.
That's right.
Oh, that's clever. So then there's no point like yeah, that makes sense, because then you don't get the insurance fraud, because no one goes, oh, well,
because
there's no arbitrage to make between the
exactly.
Everybody in a bear market would be like, oh, my Bitcoin's
well
gone.
done, Rob. Good job.
It's like,
Yeah. No, this was Justin Moon had a tweet about this earlier today, being like the best asset for a Bitcoin engineer is like obscene paranoia. And I was like, yeah, if you don't have like 4th level game theory attacking your own product and software design, you're not going to make it. So
this is why all Bitcoiners play chess, right? Because it's the same thing. It's just like I'm thinking at least a few steps ahead. All right. So how do you work out how much this costs? And are there different costs for different setups? Yes. Do you have to use specific Anchorwatch setups that then are priced because you can make some sort of calculation based on the risk of each of them?
Yeah, so several questions. So one, yes, you have to use Trident Vault, what we've built for Anchorwatch, leveraging Miniscript to do this distribution of keys, to answer that. Second, every single person goes through underwriting. And since you go through underwriting, each person, based on their behaviors and their history, just like any other insurance application, impacts the rate that they would have online. So prices are what they should, on the minimum side, I think right now we're at 65 bips as like the lowest possible that you can get if everything kind of works out directionally. We offer discounting based on certain behaviors. So if this is your this wallet is by design functioning as like long-term cold storage. This is not like I'm going to go buy a hot dog or a sandwich or something and do a withdrawal, because it's cumbersome, right? Because remember, you have to do a 2 of 3 on your side of the customer, plus we have to do a 2 of 3 on our side, right? And if both of those don't happen, then the money is not moving for the length of the insurance policy. We actually have a little bit of grace where 6 months into the insurance contract, we could have it be only one of your customer keys, right? Which is one of these interesting things, leveraging a mini script. You're able to have time as part of your security elements. And so you're able to do something where, like, if after 6 months the money hasn't moved, we can actually loosen the thresholds a bit on the customer side to help them be able to spend their money. But to answer your question, yeah, each person would have unique pricing based on how they go through underwriting. But if you're like, hey, I'm not going to touch this, this is my long-term storage, we can offer discounting. I call it a HODL discount. If you're not going to move the funds and you're saying upfront, hey, I'm not moving these funds for the length of the contract, that meaningfully reduces your risk, which means it should meaningfully reduce the cost of the product for you, right? It's kind of doing this really interesting skin in the game alignment of, we want to have the Bitcoin safe because that's how we are able to run a business and how we're able to support you guys, and aligning it so that we all keep the Bitcoin safe.
I like that. Let me ask you this.
Sorry, just quickly, just before on the process.
I'm not asking you this.
Just quickly on the
sorry, Rob.
I know the process of underwriting is complex, and do you think that will ever be open sourced by an insurance company?
Underwriting, no, because unlike software,
Phil, your question.
Yeah, that's how insurance companies make their edge, right? That would be like any business, the part of the magic sauce where they make money differentiating. Would they ever open source that? No one would ever open source like their own internal trade secrets.
I want to switch back to the how you do the payouts because of course, right? It's just it's kind of like a sticking point that I think a lot of Bitcoiners think of, right? Because of course you always you'd love to imagine that you would get your Bitcoin back, and of course, as you explained, right, because of the dynamics, Lloyd's of London doesn't currently custody that Bitcoin in order to be able to pay that back. So is there, have you heard any, besides your internal discussions, of the possible desire to do this? Do you see this even being possible in like a near-term future? And like, what type of a timeline do you see for that? Because I do think,
So I'm happy to give a shout out. So Bermuda is the one country domicile in the world that allows you to do Bitcoin denominated policies today. And there is a company that does Bitcoin denominated life insurance. They're called Meanwhile. Zach Townsend's the CEO. I met him a couple times. I think he was at BitBlock Boom last year. Like, great guy. You could have a whole long conversation with him about Bitcoin denominated insurance and how they're doing it today, for sure.
Very interesting. Okay.
Yeah, so the answer is like, not could it happen? It's already happening, and there are actually more and more players that are moving into that. as time goes on. For us, we didn't want to focus on that. We wanted to focus at large scale, being able to have the Lloyd's of London relationship and having syndicates at Lloyd's doing underwriting was really meaningful for us to do large scale policies. And all of our tech and stuff kind of is iterative and built on top of what we could do in the future. Sure, just not our focus today.
Yeah, I appreciate that, and I think it makes sense, right? From the essentially kind of like the boots on the ground, right? It's like, look, we all understand how credibility works, right? And when you get, when you line yourself up with trusted, right, with trusted entities that have been doing this for, I think Lloyd's of London's been doing this for like over 100 years.
Hundreds.
Yeah, exactly. Hundreds of years. It's like that's like the stamp right there. It's like, yeah, no, these guys are doing it right. So no, that's absolutely awesome. It's just the reason why I asked is because we just don't hear about it too often. And we often hear about, which has nothing to do with you guys, right? But the horror stories of exchanges, right? Or yielding products where they gave them Bitcoin. And for some reason, these people magically thought they would get all of this Bitcoin back.
Yeah.
Yeah.
I view what we're building in Anchorwatch
has nothing to do with you guys.
Alternative. No, of course not, right? And I want to just throw out immediately.
You guys are a safety product.
One, we're a safety product. Two, I'll never tell someone not to self-custody if they're comfortable with it, right? Like I've self-custody Bitcoin for over a decade. I'm comfortable and fine with it. I'm very big supporters of people learning how to do that for themselves. It's just not for anyone. Or maybe they're a fiduciary and they're running an estate and they want to make sure that no matter what, they can't screw this up in a way that you can mitigate the risk with better technology, and then also have insurance where in the unlikely event all the risk mitigations fail and something were to still be a loss, you can still be indemnified, right? Like it's just a different perspective around that. And I'm not diminishing. I don't think I ever will be diminishing or fudding the idea of self-custody. I think it's an important part just for Bitcoin as a network to operate. This is just providing an alternative to, do I have to wrap myself in tinfoil and go to 7 corners of the earth to make my single sig with a passphrase to hold 0.1 Bitcoin, or like keep it at Coinbase, right? Like this is providing a different architectural way for being able to execute on a way to have a different part of that risk trade-off on the spectrums.
So Rob, I went from Coinbase to using Casa. And then now I do proper self custody. Do you see Anchor Watch's products as being like a kind of premium version of Casa or Unchained or something like this? Is this just an iteration of the hybrid? I don't know what you call it, like multi-sig multi-provider model?
Yeah, I would view it as foundationally different in that we are focusing not on being a wallet custody technology company, but working on this insurance stuff. If I were to be like, I'm building a wallet and I'm in the custody game, we would have launched a year and a half ago, and I would have had it running, and I would have been, off to the races, right? We view the insurance.
So it's more like a provider for those kinds of companies if they wanted to, or for other ones. It's a differentiator in the market for wallets.
Yeah, and I would say just like Casa and Unchained, we built our own wallet infrastructure, right? We're not white labeling someone else's wallet APIs or providers, or
I think that's a huge value add.
Yeah, I think it's a meaningful differentiation. Not only does it let us do innovation of what other enterprise scale companies are offering yet when it comes to like these more advanced native Bitcoin smart contracts, we're not just reselling someone else's services with a premium because we have a marketing patina put on top of it, right? Like we're doing the meaningful hard work and differentiator, not only for us as a company and having that as an asset on our balance sheet and kind of having that expertise and skill set. It just really speaks to just our commitment to building really strong, good solutions and being in control of our own destiny. We have the way that we built our vault. If we had a different idea for a product tomorrow, in a week, I could have it on chain, operating, functioning within our existing UI with maybe some small tweaks to make it more visually representative. And we're in control of our own destiny because of that. We don't have to wait for a third-party company's product cycle to tell us when we can like launch or not launch or do anything else.
I love it. And I could tell you from an outside party looking in, to me, seeing a company that in my eyes, right, puts skin in the game, right, by having that vertical, that back end that you guys built out yourself, that's huge, because that I can tell you is a bit of a at least in my eyes, a massive sticking point with some other companies that have come out into the, in the space and have claimed the quote unquote, these Bitcoin ethos, so to speak, right?
Yeah.
So this is kind of, like this to me means, hey, we have skin in the game and this is the product that we're offering.
Yeah, I'm very proud to say that
like
the majority of Anchorwatch's team as of today is engineering, and we don't have any full-time podcasters on staff. Right.
Not yet.
Like, we just think that, like, meaningfully,
What do
we're
you
dealing
mean?
with
You're a full-time podcaster.
Ah! That's right. I think between Becca and myself, if we're each half-time podcasters, we make one full-time podcaster. So I'll take you on that. But ultimately, we're dealing with the safe keeping of Bitcoin. We should be focused a lot more on the actual security, keeping the Bitcoin safe, and not, media generation and content, right? And I think there's a place for all of these things. I just think that's for us, it's something I take a lot of pride in thinking about how to execute and serve customers well. And then ultimately, I think just for the big vision, Bitcoin's going to be successful. There's a lot of room for a lot of players to be in here, and you don't want to be too bearish and focusing too much on like the players of today and trying to like it's very win-lose, like small ball thinking, very scarcity mindset. It's not where I'm focused on. I'm ultimately, since we have kind of our ability to do this, I just want to build really great products that can serve customers in a way that allows them to feel safe where they can hold their Bitcoin. And I think what we're doing we've been quietly working behind the scenes for a while, and we're now getting ready to launch. It's something that we're going to be able to quicker iterate on security, different vault constructions and features. These are all things moving over to Taproot and Do Order. Like, these are all things that I just feel very happy about, that we've been building for a very long time, investing in our own infrastructure, so we can now kind of see where the market's at, and we can quickly iterate and prototype and find new ways to be able to serve customers and make them feel safe while holding Bitcoin.
I'm definitely bullish on Anchorwatch, man. I really appreciate you explaining all that. We are going to wrap up. You have one closing thought? All right, we're not wrapping up the segment yet.
No, I wonder if in the future we see mining companies also owning wallets with insurance, because essentially then, because it can be a bit of a hedge for their ongoing income, because either they're getting transaction fees, or they're getting the kind of HODL insurance fees.
So this is where it gets really interesting. Yeah, no, it's really interesting. When you basically enable Bitcoin denominated insurance, you enable the concept of this Bitcoin denominated yield, because whoever's providing the capital gets a majority of that premium, right? And so the premium that comes in starts becoming that. So it doesn't have to be insurance companies. It could just be, mining companies. It could just be literally anyone who is holding large balance sheets of Bitcoin. I think very much that is the longer term future. And it's something that, where does the yield come from? It comes from customers paying insurance premiums. And will there be insurance companies that blow up? Absolutely. That doesn't mean conceptually that insurance itself is de facto a scam or wrong. I just think that it's a very bright future.
Yeah,
it's a bet.
It's a bet.
You're making calculated bets. You're making calculated bets, and as long as there isn't a government bailout, it is what it is, right? Like, I think from a free market standpoint, the Austrian school is very big actually on insurance companies being the ones who mediate interactions in a world with reduced government. So insurance companies are just very foundational to just like traditional Austrian economic constructions of how the world works with a state with reduced government. And I think insurance as a concept of transferring risk is just incredibly foundational to the functioning of capitalism. And this is probably going to be one of my next conference talks, is that everyone thinks insurance is fiat because you're required to, if you own a mortgage, to own if you own a mortgage, you're required to have a insurance on it. If you are employed in the United States, you're required to provide health insurance, right? Like,
so if something is decreed, then it's fiat? Yeah, I agree. But
that doesn't mean the concept itself is fiat. That just means the instantiations of it are fiat. And I think that's an important distinction of de-risking and risk transference is very different than government-compelled programs, right? So I think that's one thing. But one quick shout out. If you want to check out this more advanced spending smart contract stuff yourself, just be able to spin it up at home, check out Liana Wallet. The guys at Wizard Sardine, Walton mentioned them earlier. You can do this more cool advanced time locking stuff for your Bitcoin. With that. And I just want to give them a shout out because I'm huge fans of them. So if you want to play around and mess with this stuff today, whether on testnet or mainnet, it all works with all the major hardware wallets. Give it a go.
Very cool.
So maybe you want insurance, so or just in case, you get REKT, which brings us nicely onto the next section, which is called REKT.
Yeah. But before we go over there, Rob.
Yes, Phil.
No, yeah, we want to let Rob shill his right. How do people get in touch with you on Twitter, your
Anchorwatch.com.
websites? We're gonna put this all in the show notes, guys.
Absolutely, yeah. Go to anchorwatch.com. My Twitter handle is @Rob1Ham. Do you want me to read my Noster NPub? I can start.
No, but we're gonna post it.
Primal.net/Rob. You can find me over on Noster. Rob1Ham on Twitter. Go to anchorwatch.com if you're interested. There's an intake form on there. Fill out your name and your basic information. We're starting to launch only in the United States. Grander ambitions to do more things, but we're just keeping the scope narrow so we can focus on where we think we can have good distribution and be able to offer a good product before we kind of boil the oceans and go too fast.
Sweet. All right. We are going to move it on over to REKT.
First up on REKT is the timings of this episode, because I took advantage and asked Rob more questions than we would normally have in the Fireside chat. But moving on to actual stories, we have apparently my idea that covenants like are never going to happen because there's no market demand is a flawed theory, according to some wizard, Mr. Lopp, who says we shouldn't add functionality X to the Bitcoin protocol because there's no market demand for it. I keep referencing low mempool fees, suggesting that there isn't the market demand for it. He says this is an ahistorical statement. Technology doesn't evolve in that way. The market didn't demand things that didn't exist, such as social media, video streaming, e-commerce, etc. Rather, low-level developers wrote the basic building blocks that could be leveraged for a number of things beyond their limited imagination, etc., etc. The market for Bitcoin protocol changes is not the consumer-level application user; it's engineers who envision what they might build. Yeah. I'm not sure I agree. I still think covenants or activation of covenants, it seems slightly wrecked compared to where it was a few months ago. We talked a little bit about this earlier in the show, so I don't think we need to go over it unless you guys have any further comments about the direction of covenants right.
I'll just throw out there that I think a couple months ago during Bitcoin Plus, I would call the local top. I don't think that it, in any meaningful way, though, has demoralized the people that are working on this stuff. And it's just a longer term conversation. Like, as someone who would like directionally to have covenants, like I want them, I don't think anything's even activating next year. Right. I think we're just trying to, and it's not that I don't want them. It's just realistic. But I think there is a gaining coalition of people that are starting to work through these things, that are putting the effort into having the dialogue and the conversations. So it's just a longer term thing.
Part of the covenant's proposal is the shared UTXOs, right? So I'm seeing a little bit of pushback from certain people in the space, saying essentially that the shared UTXO model is not really. And again, I personally don't know any better. I'm just seeing other people's comments, right? And I saw some pushback saying that that's not really, that's not really going to help us, or more to the point of it's a quote unquote terrible user experience. I think I saw John Carvalho, Bitcoin Error Log. Yeah, he was alluding to that in one of his threads, and I understand, right? Where he gets his money from Tether and stuff like that. So it's people, you know how it goes, right? If somebody terrible gives you money, then you're obviously their puppet, and you'll just do everything they say, right? It's that's how business works. So yeah. I don't know. I don't know if these pushbacks are illogical, is what I'm trying to say. Do you think there's any merit to them?
So I think there is merit.
I just don't know.
Yeah, so I think there is merit in the idea of like the user experience may be bad, because you know what? For a really, really long time, the user experience really sucked in Lightning. And if we're going to be honest,
right?
Like the user experience really sucked in Lightning, and it's gotten better and better and better. But if you told everyone who was looking forward to adding the Lightning network that the UX would have been as rough as it was, and was really going to be a tool for power users, you probably wouldn't have had as much excitement. I just view it structurally as that from a consistency standpoint, the Lightning Network got 3 different soft forks to be able to turn on. It got 2 time lock opcodes, and it also got SegWit. And for me, that was before there weren't prototypes and elaborate designs and a bunch of use cases, and it was just the Lightning Network. And I love the Lightning Network, and I use it all the time. I just think that there's been an interesting shifting of the goalposts. It's VJ Boyapati makes this point where he's actually of the mind that he would have actually been okay if we ossified before SegWit. And I think honestly, I think that is a more honest framing of the debate and argument than this like basically coming in ad hoc after the fact, being like, at this moment of time, no more changing of Bitcoin, ossify. Whereas like there's no counter argument as to why the Lightning Network, there's no counter positive to be like, oh, well, the Lightning Network's okay, but anything else you suggest after that is kind of too far gone. And it's fine. Everyone's allowed to have
where's
their
the
own
line?
opinions. Like you're allowed, and listen, like everyone's allowed to have their own opinion and their takes on these things. I just think that the actual ideologically consistent thing is VJ Boyapati's and just saying, you know what? Satoshi turned everything on. He turned some things off. We don't even get SegWit, the end. Right? I think that's a way more consistent, fair way of going about it than my project and the thing I like gets to exist and was good and justified for having said upgrades, and anything after that is bad. No, that's just my take.
Yeah. I can see that. I think that that's a well-balanced, reasonable take, right? It's like it makes sense. People may not like it, right? To your point, not everybody's going to agree. That's part of Bitcoin. But look, I mean, I do think that that's more intellectually honest than the moving goalposts, right? So because that, I can't disagree. You know, Walton, got what's next on the menu for REKT?
I think a little bit is all the Trump supporters, and I think all I'm going to do is direct them to go read some Mark Goodwin. Like okay, Trump talked the talk, and maybe he's going to free Ross, and you know maybe he's certainly going to pump the market more than the Democrats. But like, is he really all that pro Bitcoin or pro Bitcoiners or pro freedom, or you know, who is he appointing? Go look at this. Is he just actually trying to, you know, enable, you know, the US to be the best shitcoin place, or is he actually helping Bitcoin? I'd also like to say that people REKT are people who think that they're holding self-custodial stable coins, right? Stable coins being part of the push to make more dollars around the world, right? Tony Klaus reminding people stable coins are not self-custodial. Your money is at a bank, and the bank has custody of your money. Brian Armstrong, might be trying to tell people otherwise. I've never used stable coins, but don't use them, people. And
Sats are my stable.
You're not holding them.
Yeah.
Sats are my stable coin. One sat equals
Sats are your stable coin, right? 1 Bitcoin equals 1 Bitcoin. And talking of things that don't kind of stay the same. I like this meme. We're now at the stage, and this is beautifully poetic. This is my favorite kind of price movement, is when Bitcoin's going up, and what else is happening, Phil?
I don't know what else is happening. The hash rate's going up,
and Ethereum's going down.
Oh, okay.
Right? This is the music to the maxis ears. Some guy being like, yo, I just spent like, you know, $500,000 on a Porsche. Thanks Bitcoin, because he's able to do that. He's save some money, and maybe you don't like how he's spending it, but it's his money, so you know, go fuck yourself. Meanwhile, the Ethereum guy says a thanks Ethereum, and he's pleased to have this little very brightly colored scooter to take him to his McDonald's shifts.
I think the clown scooter is par for the course. I think that is the perfect vehicle. Like, it wouldn't surprise me if a person hopping off of that thing would tell me to buy Ethereum. I'd be like, yeah, I expected that from you. So, yeah.
You're like, yeah, nice scooter. He's like, yeah, man, it's got so much utility.
I saw a really funny one that was quote tweeting that same tweet, and it was just someone buying a rope off Amazon.
Can't even afford a ceiling to hang yourself. Proverbially, right? It's just not metaphorically. Sorry, right? We don't really mean to tell anybody to do that. It's metaphorical.
No, you should not.
No, you should not. But yeah, Ethereum is definitely. I can say that after 6 years of never coming back to reach their all-time highs, and watching them spin out one narrative after another that doesn't work. I think the funniest thing on the climb up to, on Bitcoin's ride up to, 99K has been this like illusory truth effect where I'm seeing all of these big Ethereum accounts constantly putting out tweets that say, X posts that say Ethereum is money. It's like all they remind me of is the guy in Idiocracy
Really?
that just, like I'm seeing tons of them. Okay, like they just keep repeating it. It's like they're trying to make it real by typing it. They hope that if they say it enough times.
I clearly don't see any of these people, because to me it seems like there's a whole bunch of people that used to say, use Ethereum, that now essentially recognize that you can gamble with meme coins on Solana. It's cheaper than using Ethereum, or you can buy Bitcoin. There's nothing else. There's buying Bitcoin and there's gambling, and I don't think like people are.
Listen, I don't buy I don't buy this shit, but there's something beautifully egalitarian about meme coins. There is no venture capital firm putting money into it. There is no. Yeah, it's like, no, this is. I have locked myself in a dog cage, and I'm going to sit here with a leather mask and bark until you give me enough money so I can get out. And that's a much more honest trade than a roadmap to decentralization and about how you're going to solve world hunger by putting bananas on the blockchain.
Yeah, seriously.
It's way more
Unless
honest.
you speak to Mark Cuban. Mark Cuban definitely thinks that the bananas are worth more.
Oh, of course.
Yeah. Talk about the arc of that guy. Anyways, no, we're not going to get into that. All right, Walton, what do you got next for REKT? That's it?
No.
All right. We are going to move it on over to the Hopium.
The Hopium.
All right, guys. So as you could imagine, with the price quickly, the Bitcoin fiat exchange quickly approaching 100K, the rosy lens is firmly placed on our heads, right? We're wearing these rosy lens VR headsets. The future is beautiful. It's only getting brighter. And I figured, why not? Why not? Nobody cares about the truth. Let's just talk about some Hopium. So we got this article over here. Analysts now suggest Bitcoin is going to, could hit 137K. That seems like a nice number. It's all based off of Fibonacci retracement and stuff like that. So boom, science, lines, percentages, right? Arcs. There you go, 137K. But if that's not enough for you, this bullish tweet right here is so open-ended. Who knows where we end up? All right, it's a great tweet over here from Joe Burnett. Let me get this straight. Bitcoin is almost 100K per coin. No Standard & Poor's 500 companies have adopted it as their primary treasury reserve asset. No major countries have adopted it as their primary treasury reserve asset, and a majority of people in the world still have less than 1% allocation. You cannot comprehend how high this will go. Boom. I mean, I don't even know what to say. Guys, we're going to see insane numbers. Insane numbers. This is exactly what happened in the previous cycles, right? You start to see all of this stuff, and like your fucking monkey brain starts going nuts with like all the amazing shit you're going to do. And if that wasn't enough, the king, no, Walton's not, but don't worry, Walton, you're going to love this. The king of Hopium, right? Dennis Porter. That's right, guys.
Hell yeah.
Yeah. I just got off the phone with one of the smartest people I know. He said Bitcoin hits gold parity this cycle, guys. That's over. I mean, like that's going to be insane. That's like over 900K, I think, a coin or something like that. Anyways,
this guy ran a podcast called Smart People Shit, so he knows smart people, right? Like,
he got off the phone with them, man. He was talking to them. Okay, this means Bitcoin hits 900K this cycle, Walton. Keep in mind,
it's possible he was just talking to himself. One of the smartest people he knows. It could have been himself.
But look, this guy goes on. So, I mean, look, this guy, the sauce is right here. The guy goes on national TV, talks to the most powerful people in the world, and is huge Bitcoin bull.
Could be Dennis Porter.
I mean, look.
It could be himself.
My camera just died. That was so bullish.
It can't handle it.
That's how bullish this was.
Maybe it's what's that real estate guy called?
Which one?
Mike Alfred. Maybe it's Mike Alfred. I feel like it's probably Mike Alfred.
Mike Alfred.
Yeah.
It could be Mike Alfred.
Okay, so look. Oh, go ahead.
Well, the Bitcoin Bugle says that Dennis Porter can cure erectile dysfunction. So the man is a man of many, many, many talents.
I mean, that's a big, dude.
Big if true.
Yeah, I was just gonna say true if big. I mean, that's
Also
nuts. But look, in all fairness, I mean, this is the point, right, where we're about to, people don't believe it. I see some randos who don't know shit that are saying we topped out, and that's fine. They can believe that if they want. But Bitcoin bull markets, they do melt faces. But I want to remind people, not a single one of us knows what the fuck we're talking about. Okay, when it comes to what the Bitcoin price is going to be, using like all of these fancy technical indicators and all of this. Like, look, we get it. It confirms historical trends. All right. It uses data to present possible outcomes. Okay. And possible scenarios. But like, we all got to zoom out, stack sats, and in the famous words of Odell, which we haven't seen on Twitter in a very long time, right? Got to stay humble. Because this is where...
Yeah, stay humble and make $1 million price predictions in 2021. Odell, woo!
Exactly. But, right? And none of that came true, okay? I saw $50,000 price predictions back in 2017, right? Because we hit 20K.
Well, apparently Mr. Hoddle, he's proud to say he was making $1 million price predictions in 2013. So,
right.
Everyone makes mistakes. Yeah.
We got to stay focused, guys. Stay level-headed. Guys, that's going to do it for Hopium. That's going to do it for this week's episode of Pleb Underground. Before we go, Rob, one more time, show your stuff. How do people find you? How do they find Anchorwatch?
Yeah, anchorwatch.com. You got me at Rob1Ham on Twitter, primal.net/Rob for Noster. And if you're interested in learning more about Anchorwatch, go to the website, fill out the form. We'll get a hold of you shortly, or you can hit me up on Twitter or Noster as well.
Sweet. All of that's going to be in the show notes. Guys, don't forget to check us out on our audio-only platforms, Apple Podcasts, Spotify, and Anchor. If you want to stream us sats, check us out on fountain.fm. Walton, man, how do we end this one?
Fuck shit coins. Thank you. That's it. Yep.